So, there's the brother right there. Actually, get the other one. There. Now the brother's got the credentials on the screen. All right. So anyway, let's get the time and date stamp here. Thursday, 2026, 41 seconds, year 2023, 11th month, November 16th day. So, here's the Forex market. So, I just go to the thing here and hit the number 5 here, right above the D, the black D, and the YouTube icon. There's a 4 and a 5. So, I hit the 5. There it is. This is the pound, the British pound yen, Forex currency. And so here's a trade over here. It says to the left, it says buy 56. And this is the time frames, the 15-minute over on the side. And here's the 4 hour. So there's that. So that's pretty much, it's come down to support around there. So I've got a stop loss down here. I just threw it all the way down there just to get it out of the way, just to be in the habit. So let's see here. And then there's this dot at the top, dotted line at the top is where that's a take profit. But actually, there's a blue line. See if I get this one. Tap on that white line. I don't want to. I can actually get rid of it. I don't really need it there. There. Now there's the buy line right there. And then it pretty much came down to this other line right here on the 4 hour line, which is support or resistance line, which is, a low in the market, because that's where it took off before right there. All these white lines that go up the screen, 3 of them, 3 big bars. That's called support. So then go to a higher time frame, and then all the way to the other side there's a high point over to this other side too. So just draw a white line, is what's on the screen, this white line here. Well, there's actually a little magnifying glass, so there it just draws all the way across. Usually that's what happens when it pops up above it. It will come down to right back down to the line where it broke past the previous high mark over here to the left. So it's pretty much came all the way down. So supposedly it's going to, on the 4 hour time frame, so over here on the left it says 4H on the side. So I'm going to tap 4H. Okay, now on the 4 hour time frame, usually there's all these white lines going straight up, and then it gets to the top, and then it comes down with the black lines and it hits support, and then it goes back up to the top again, up to the top. So supposedly this is going to go all the way back up to the top tonight, and go to the next time frame, which is the daily. Over on the side it says D1, and so here it is once again. There's a support all the way up here. Squeeze everything up together. Let's see here, bring it down. Hold on, let me go to the next, go to the weekly. And I guess that's as far as it wants to go. Anyways, let's go to the monthly. Yeah. Okay. So there's the white line all the way to the top. In the middle, there's the yellow lines that go all the way to the top, and then they go all the way down. And so that's usually where this other white one over to the right side, where the red is, it's going to go all the way up top to test that line again. It's just the patterns in the market. See, same thing at the bottom. They all came down to the same bottom down here. See there? There's always called a double bottom is what it's called. A double bottom or a double top. That's what the trading markets form all the time. Okay, so over here on the left of the time frames, there's the MN is the monthly, the W1 is the weekly chart, the D1 is the daily chart, the H4 is the 4-hour chart, the 1-hour chart, and then the 30-minute chart, the 15-minute, the 5-minute, and the 1-minute. So we'll go back to the 1-minute chart and then spread it out again. So I go back to the 15. So there it is again. And that's where I bought, way up there at the top. So the trade went all the way down against me. or went down. So now let's look. Now I'll turn it sideways, and down at the bottom it says trades at the bottom middle. So when I click on that, it'll show how much money it is in the bad. It's minus $14,000. And up at the top, it says how much is in the account. It was $88,992.60. But now, since that's $14,000 in the bad, it went down to $73,000. So, and then right next to this is the history down there. And if I click on the history, these are all the trades. I started trading on the 11th over here. But all these first trades at the top, those are just mistake things, learning how to use the system. So all these 171, minus 171, minus 100, they really didn't start till right here at the pound yen at the $1.58. So I started trading little bits at a time. I lost $1, lost $1, lost $1. No, I didn't. No, those ones aren't included. Here it is. The first trade. Well, yeah, I think I just hit it a few times and just bought whatever just to test it out. I just hit it and then got out of the market. I pressed buy and I immediately cashed it out. Closed the position just to test it out. Something like that could have been. Anyway, so here's the first, right here, the pound. I sold 10. I started making money right away because I've got 5 years experience. And as long as I was trading just little bits at a time. And I lost a $10 there. I won 10. I had won 10, 5, $1.25. I lost 8 there. 150, 26, 4, lost 66 cents, 23, lost 52, 6, 33, 149, 1976, lost 1,000, but then gained 2,000. That's because I wanted to start trading bigger lots. Because you can see over here it says sell 20 and then sell 775, which is actually $750 a pip. So this one would be $20 a pip. That's 50 cents a pip. Big difference. I did a big jump just to, there's 50 cents a pip. Here's 5 cents, 50 cents, 50 cents, 50 cents, 50 cents. Most of these are 50 cents. There's a 10 cent, 10 cent, 10 cent, 10 cent, 10 cent. There's a 10 lots. That's actually $100 a move. Every time it moves up one number. So anyway, so here I am. I lost 1,000. Here's 2,000, 1,000. Trading big lots. $600 a pip. $1,000 a pip. So I was winning, and then with the big ones, I was winning, lose some, and then I lost this big one here, 6,000. Then that one, then I gained 11,000. And then I was on a streak, and then I lost a couple. I was on a streak again. I was on a good winning streak because I was up $20,000. I lost a little there, and then I got on a good streak here, and I was staying disciplined. That's what it was. Then I started getting greedy. I started getting greedy with the big lots, see, I was having success, so I was like, cool. And then all of a sudden the thing started going shit for the winner. Loser, 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 loser. Winner. And then a 10,000, then loser. Then I won a 12,000, and then lose, and then lost an 8,000 the last one. But anyway, so now I'm back to this one, and it's 14,000 in the hole for now. And I'm not going to cash it out, because, it's just a demo account. This is fake money, folks. Okay, so now next to this red thing at the bottom where it says trade, right next to it is the charts. So I'm going to press on the charts and then switch the phone to the side. And so there it is. And then everything, the market starts to move at 12 o'clock midnight on the West Coast. It's called the London session. So I'm actually waiting for 12 o'clock midnight at the London session. To see which direction this thing's going to go. Like I said, more than likely it's probably going to go up. But if I'm wrong and it doesn't, then it'll keep going all the way down until, usually what happens on these accounts is that, they go down, so much money gets lost, and then the trading rules is called margin. And then the computer automatically closes the trade out when it loses so much money. So I'm just going to let it ride, and if it loses the money, oh well. I still got some left in the account. And besides, if I lose all the money in this account, it's all just fake money. So, So in other words, according to the doctors, I'm not much into the doctors' regimens, but they call it a practice account. Practice makes perfect, so they say. So, anyway. So, yeah. And then hit up here in the left-hand corner where it says the blue GBP JPY. That stands for Great British Pound Japanese Yen. So if I tap on that, there's some other currencies here. that I can look at the charts. Like at the top one is Australian dollar. So I can tap that, and then it shows the Australian dollar. And go to a higher time frame, to 4 hour time frame, and it'll show more or less the overall big pattern to the chart. So here it's made another double top, basically. And usually that means that it's gonna, after a double top, it's gonna come down. So I'll get a thing. So it's gonna come down like this to this support down here, where everything's all jumbled up on the left. So this should come down all the way down to there. So that would be a feasible trade to get into. And then this little X at the top right hand corner up there, tap that. This marksman thing, you know, to show stuff and all that, to measure stuff or whatever. Just tap that X at the top and it'll go away. So anyway, so here's another one. The next one down is the Euro Yen. EURJPY, the Euro Yen. I'll tap on that one, and here's what that looks like. And kind of in a way it's at a double top. Let's go to the daily. The daily's just all the way up to the top, all single. So usually, in order to trade, let me get this thing. Okay, it would go to the top and it starts coming down, and it'll come down a little bit, and then it will go back up and form a double top. And then that's the best time to place the trade, to trade down and have it come down, and it'll come down here. The leg will come down somewhere around here, or sometimes it'll go all the way down to there. But that's how trading functions. That's basically how everyone trades. So I'll go back here, and I can look at all of them if I wanted, but I'm gonna go back to the GBP JPY, the trade that the pound yen. Go back to the 15-minute. So I'm watching this, and I'm waiting for the midnight hour, which is basically 3 hours away, and when the market opens for the London midnight is the London market, where England, it's they start their trading sessions moving the money, and all the big banks start shifting the money around, and it causes the markets to move up and down. So yeah, so hopefully, this amount of space down here, right here, from here to here, is $14,000 at $650 a pip. Now, as I bring the crosshairs down like this, see that white box all the way to the right, and the numbers keep changing and changing and changing and changing and changing. Okay, so up where I place the trade, it starts off at 187, 130. And then it goes down it will go down to 129, 128, 127, 24, 25, 26, 20. See, it goes down one number at a time. But it's hard to get it to go one number at a time with this, it's really hard. But anyway, every time it goes down one number, or even if it went up a number, every time it goes up a number, every time it goes down a number. Okay, that's called 1 pip. So from 130 right there, 187.130 is where it was traded at, and it went down all the way down to here. It's down to here now, where it's at about 186.829. So just the calculator would be subtract 186.840 from 187.32, because up at the top in the blue, all the way to the right of the screen, that's where the order was placed in, which was a buy order, expecting the market to go up. But it never went up. And so, because the only reason I placed it there is because there was a double bottom down here. And usually after a double bottom, it's expected to move up on that last leg and go back up to support. Where there's a jumble of bars over here. See? All this shit right down here, right in here. It'll come back to where all the shit, the jumble is, where the line is, where most of the bars are at, congregated together. So, but it didn't go, and when I placed the trade, it didn't go, and it came down. So, you know, but I actually placed the trade when I was way down here, but I got out of the trade too early. Way too early. I got out right there because I thought it was going to keep going down, because I was expecting it to come down here where it is right now, all the way down there. But it didn't do it until this one. It didn't do it till that one, so that's why I got out of the trade early, because I thought, it's probably going to turn against me and come down. So then I kept buying. You know, it kept going up and going up against me, or I kept selling. I decided to sell as though it was going to go down. But it didn't. It just kept going against me, and that's when I finally said I was down 7,000, down another one, 8,000. Then when I got up here, I said, oh, shit, it's probably going to fucking leg up. So, and it didn't. It fucking went... And that's where I'm thinking, oh, fuck. So I finally just said, fuck it, just let it ride. It's probably only going to go down to there anyway, then it will come back up, so. But anyway. But, you know, these things right here, we press on the trade here, and then there's a thing that says close position, it says modify position, trade, depth of market, and stuff like that. But press on modify position, and then there's a place to put stop loss and a take profit. And so I'm actually going to put the take profit at about way up there. I'm going to raise it up to way up there. That way, you know, I'll just let it ride. Or, you know, it won't stop out early. So I just typed in the number and then hit the red bar right there. It says modify. And then, boop. Then it's done. And I tap on it again, and now the modify it, and there it says down here off to the side, it says, you know, SL, whoops, it says SL, and then TP, just above the box, just above the red part in the middle of the screen where it says just above in the middle of the screen where it says close position, then there's another box of stuff with the minus 12,951.22, and it says swap 1294, and it gives the date and time. Then off to the left it says 190.000, which is the number that was just typed in. And the TP off to the left, that's take profit, it's called, which is saying that it'll cash out. Then up above it, it has SL, which is a stop loss. And that's just an automatic place that can be set in the market to where if the price goes down, 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 then it'll get down to that point and it'll automatically cash out with a loss. That's why it's called a stop loss, to stop losing and stop losing. And that's the one thing I didn't put in. Actually, when I get back to the screen, in the middle down at the bottom where it says trade with the red box with the squiggly line, off to the left it says chart with a couple, those are called candlesticks, a white candlestick and a black candlestick. So just press on that and that'll get back to the screen. So like I said, if I would have put a stop loss like down around here, because I pressed a buy order, which means over there to the left over here it says buy with 65 lots, which is $650 per one of these ticks or pips. A number up, each one of these numbers going up, that's $650, $650, $650, another $650, another $650. So if I would have put a stop loss like right down here, right around down in here somewhere, then it would have, and just left the stop loss there, then it would have automatically only lost a couple $1,000. But I decided not to put one in, but I actually just put one way down here. I put one way down here just to put one on there, just to keep the habit of putting one on there. But when I go to a higher time frame, like I said, there's the stop down there. I got it way the fuck down here. I mean, it's like fucking $300,000 away. Like if it was $1 million account, that would probably be around $300,000 loss. But I can move it up if I wanted to. Like I could go to, I could say, well, let me move it up to here, about one over to the right where this thing moves up and down. I'll set it at 183.915. And then it'll jump from way down here to 180.000, all the way down here where the green line is. It says 180.000. So I want to move it up to here, 183.900, just call it. 183.900. That's close enough. So I turn the screen to the side and that reveals the chart, the trade button down at the bottom. So let's see what I say it was. 184,600. So I go here, press on the buy 65 right across from the minus 13,554. There, it changed a little bit. So if I tap on that, and then down here it has the red close position. Just underneath it, it says modify the position. So here I got it down at the top right. It says the green 190.000. So let me go back. I have to remember what the number was. So I'm going to go back to the chart. 184.6 is where I want to set it at. So modify, then go up here, tap on it, then hit the backwards button and put a 4.600. So modify that, and then go down to the bottom here where it says red trade in the little squiggly box. To the left of it is the chart, it says, with a white candlestick and a black candlestick. So I tap on that, and then I turn it sideways. And so here it is. See where the white thing is? I moved the stop loss way up there. See how it moved? Because it was down here around 190, it was down there. So I can move that stop loss wherever I want. But that's a little bit too close for comfort right there. I'm gonna move it back down to here. So I'm gonna go back, modify position, and then go back up there. Set it back to around, I think it was 160.000. Close enough, that's way down there. So I go back to the chart. Now it's fucking way down there. I got it way down there too far. Let me move it back to about 180. Yeah, that's about right. Like that, hit it again, tap, whoops. Hit it again, modify position, oops, stop loss, 180.000. Modify, and then hit the chart at the bottom, turn the phone sideways, and now there it is. Now I can enlarge the screen. Whoops, not too much. Get that thing off there. There. Ah, fuck. There. Just the screen can be changed just by pinching it with the fingers and spreading the fingers apart. So anyway, and go back to the 15-minute mark where everything's more there. So I can sit here and just fucking watch it move and put it on the 1 minute chart. Up here at the top left, it says M1. Tap on it. And then each one of these candlesticks is 1 minute time frame, so it's easier to see how the price moves up and down. Right now it has a top, and I'm anticipating that this white bar right here, I'm anticipating that it's going to go up for a double top. Because once it has a top and then it comes down, usually what it does is it goes back up and forms a double top like that. But I can also go to the 5 minute time frame to get more perspective, and yeah, it would seem like it. It seemed like it would right here, it would come up like this and form a double top like that, and then come down again to around there, and then it would, as it's there, it would come up and a little bit, and then would come down for another double bottom, and then it'll go up like that. And then on a lower time frame, it would, same thing, double top and then come down, and then a double bottom, and then go up again. Double top, dun dun. So that's how the market functions. But it doesn't always function like that. So that's why trades are lost, because it's a gamble. So the hardest thing in trading is being disciplined enough with not betting too much money. That's the problem. So here it's coming down. See, like that? It's coming down this is the 15-minute time frame at the top. When I press on it, tap on the screen, there's a 15-minute to the left in blue. So this is coming down here, and it's coming down to form another bottom on the 15-minute time frame. Each one of these candlesticks is 15 minutes in time. 15 minutes. So some are smaller, some are bigger. So during the 15-minute period, that's how far for that 15 minutes that the price went down. For the black bars is down, and these yellow bars are up. It went up 15 minutes there on that bar there, right here, this one here. It went up, and then another 15 minutes it went up a little bit, and then for 15 minutes there it kind of went up and went down, but then it closed in the middle toward the end of the 15 minutes. And then off to the next one, there's a little 15-minute one. So it just moved just a little bit up and down. It moved up. It moved up from the bottom of the black one to the left. And then the next 15 minutes, it moved up in price for 15 minutes, a little bit there. And then for the next 15 minutes, it moved down a little bit. But it has the end of the candlesticks, so it actually went all the way down because there's a wick at the bottom, but it went all the way up, and then it stopped at the end of the 15 minutes. The price stopped right there, and then the next one is you can't even see it, but it's a small little thing. It's just a stick. But the next one is more, you see the stick at the bottom. That's why it's called a candlestick, because it'll have a stick, a wick. Some will have wicks, some won't have wicks. So the price went down right here even further, but it went all the way down right there. That's how far it went. But then it went back up in price a little bit, but at the end of the 15 minutes, it stopped right there. So there's just that much black that shows that that's the last place at the end of the 15 minutes where the candlestick had to stop. But yet it did come down in price all the way down there during that 15 minutes. But then it went back up in price. And then the next one, the white one, it for the next 15 minutes, it went up. And then it stopped right there. And then the next 15 minutes, it went up again. And then it stopped right there. And then the next 15 minutes, it dropped down a lot. See that? Then the next one, it went up a little bit. And the next one, it's just right there a little bit. And then the next one, it actually went up a little bit, but then it came down. But then it went back up. And then it stopped right there. And then the next one, it came down. And then the next one, it came down even further. And the next one came down for 15 minutes. So each one of those is 15 minutes. And then the next one. And then over it moved 15 minutes. And then that one, it moved 15 minutes. It moved up. So this one, it moved up 15 minutes to there. Then it came down, but it left, no wick, okay? And then the next one, it went up again. And then it started coming down. So at the top, when it reached the top of the one white one that was on the left, now it's starting to go down further, so everything has to be black. So, and then once again at the top right hand of the screen, there's a white X, and if I tap on that, that'll cause this, it's the crosshair is what it's called. It'll cause the crosshair to stop, to disappear. And if I want to get the crosshair back, I tap on the screen over where the numbers are at to the right hand side, tap on those, and there's that in the middle of the screen all the way to the right, there's that crosshair right there. So when I tap on it, it only stays visible for a couple seconds and then it disappears. So if I tap on it, and I tap on the crosshair, so there it is. It shows back up on the screen. It's a nice tool to be able to pinpoint some stuff. And then top right hand corner, once again, tap on that X and that'll cause it to disappear. So now if I tap on the screen, now I can go down to the 5 minute over here on the left. Now each candle is 5 minutes, represents 5 minutes. So I can I can get a more close-up picture on this, get the crosshair here. I can get a closer up picture on the move up and the move down. And so this same move up and this same move down, going down to the lower time frame, up here go to the minute on the left-hand side. There it is. Okay, so here it is in a bigger scope. See, this is all that 5 minutes right here. Hold on, let me go back to the 5 minutes. Yeah. Okay, so there it is. This big long one, that's right, that big long one, and then that little one. So I have to remember that. So go back to the 1 minute. Let's see here. Yeah, I just made it smaller. So yeah, there's the 1 minute. Wait, something doesn't seem right here. Anyway, let me go back 1 minute, and then 5 minute, and then 1 minute, and then 5 minute. 5 minute. So that's this one right here. Actually, that whole 1 minute is just this one right here. Dun, dun. And I would have to pull the screen out to show this big long one here. Because on the 1 minute chart, this would fill up the whole screen. It would be like a magnifying glass on this 5 minute. So let me see if I can show that. Yeah. So there it is. All right. That's where it's at. So this whole long one right here is that long wave on the 5 minute. See how it fills up the whole big screen right here? And then it comes down. So if I go back to the 5 minute, it'll be a smaller version of this big microscopic version. So go to the 1 minute or the 5 minute, and there it is. See, now it's just a smaller version of that same pattern. Because each one of these bars right here, these candlesticks, each one is 5 1 minute bars. So there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 5 minute bars in this, and that move up. And then go to the 1 minute. So 5 times 13. See that? 5 times 13 all the way to the bottom here. So each one of these, that's 1, 2, 3, 4, 5. 1 candle. 1, 2, 3, 4, 5. Another 5 minute candle. 1, 2, 3, 4, 5. That's 3 5 minute candles. 1, 2, 3, 4, 5. 3 5 minute candles. 1, 2, 3, 4, 5. 4 5 minute candles. 1, 2, 3, 4, 5. 5 5 minute candles. 1, 2, 3, 4, 5. 6 5 minute candles. 1, 2, 3, 4, 5. 7 5 minute candles. 1, 2, 3, 4, 5. 8 5 minute candles. 1, 2, 3, 4, 5. 9 5 minute candles. 1, 2, 3, 4, 5. 10 5 minute candles. 1, 2, 3, 4, 5. 11 5 minute candles. So that's pretty close to what was said. So you go back to the 5 minute candles. So there it is once again. So there it is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So I was 2 off. I probably, it happens. Miscounted. Anyway, so that's that. So see here on the 5 minute, see how it's continuing to go down and go down and go down and go down, and it's going to form a double bottom down here. And sometimes it doesn't always get all the way to the bottom. Sometimes it'll be down just near it, and then it will start rising, and then it'll break this mark right here, this high. It'll break that, and then it will go up to the next level where everything's clustered together. It'll move up to around there. Unless the bankers decide that they just want to keep going, keep going, keep going. So that's the risk with everything, because the central bankers are controlling the whole market. And they know that all the traders, most of the traders know these patterns. And so at any time, the central banker can say, well, I'm going to pull a fast one on here and get over on someone and cause them to lose so that they get extra money. That's the name of the game in the stock market, folks. It's called how to see how we can test or get over on someone. It could be a test, it could be get over. And only those that have discipline to just trade just a little bit of money at a time, that's only those that are disciplined are the ones that end up have more winning trades than losing trades, and so they're able to enjoy more money and live off the money or whatever. So in a way, it's like, in a mean way to look at it, the central banker is the bad guy that's tricking or seeing if he can get one over on the trader. But also at the same time, that universal mechanism, which is, everyone in the universe gets to be whatever they want, and it might seem childish. It might seem childish that one tricks someone else, but also at the same time, sometimes being tricked is the best way to grow up. So that's why the universe allows that stuff to happen until everyone grows up and less and less tricking going on. Whenever that day happens. Some people call that shit heaven. So, we're finally, the Savior has saved us, and everyone has grown up. Although in the Savior stories, it's called, there's the bad side on it, and the Savior beats up the trickster, right, and throws him in hell. But that's just a story. That's just one way to look at things. Everyone gets to believe and tell stories and believe stories all that anyone wants. So, and they can be stuck on stories too. So see how it's kind of going down. So. And then, go over here to the lower time frame on the 1 minute. So there it goes. So it's making the way down here to the bottom. See, down here, all the way down here to this. So usually it's a double top up here. So it would go up and then cut and start a double top. And sometimes it doesn't do the double top. Sometimes it just comes straight down. Same thing with this one. It didn't do a double bottom. It just kind of went down and then went straight back up. But so anyway, it's just it's a matter of repeating, watching the patterns and getting used to them, start, to see things. And a lot of times during the slow parts in the day where the markets are, the central bankers aren't trading, sometimes they get a lot of these pointed things instead of double tops and double bottoms. So anyway, so we can just sit here and watch the 1 minute and anticipate that this is going to come down here to the bottom. And sometimes it only goes part way, and sometimes it goes further. So I'd have to get this thing to raise up. Maybe if I spread it out. That kind of sucks. So you get that thing out of the way. Kind of sucks. Can't raise the screen up. I just realized that. Oh, there it is. Now I can raise it up. I have to go to the right and where the numbers are, and then just with one finger put it in the middle or somewhere in the top too. So there it is. Yeah, so sometimes, get the crosshairs, sometimes as it's coming down, sometimes it'll come down to the bottom right there, and then it'll go a little bit below it, and then it'll start to rise. And then it's looking for this point right here, and when it gets to this point, it'll hesitate for a little bit, and then it will rise above it and keep going and keep going and keep going up because of the double bottom. That's the nature to all markets. That's the nature to every trading market. They all trade the same way. So anyway, so there's that. So we could just sit here and watch it if we wanted to, which is exactly what traders, this traders just sit here at the screen and watch it. And they wait for it to get down there, and then they place their trade. And also on these 1 minute time frames, there are, going back in history, back testing things. Even on the 1 minute time frames, there are double bottoms. Like, okay, so double tops. So here's an example of one right here. See how it went up, went up, went up. It got to the top, then it came down a little bit, then it got to the top again, and it went a little bit further, but then it came back down, and then it went down. And this was an unusual move down, because sometimes it just does that. It moved down in 1 second. It went. I was watching the screen. As soon as I put the trade in, I was kind of watching it, and all of a sudden it went. In 1 fucking second. It moved down to way down here in 1 fucking second. And then it started whipsawing. I mean, it was actually moving that fast. With up and down, you can see the candlesticks, but it would move up and down on the candlestick. There was some serious stuff going on with the bankers. And it could have been that they were watching me and that they were wanting to show me some things. And so I got to see some things. And I said, oh yeah, well, I'm familiar with that shit because I've traded for 5 years. I've seen it before. So it finally got down to here, and then it started going up again. So this would be like a double bottom right here. So it went up, and then it came down, so that there's kind of like a V right here of black. There's blackness. It has a V, like a pyramid. Same thing up here. It'd be an upside down pyramid, a V. It's called double top. And then down here, the V is called double bottom. And so here would be the kind of like the top right here. no, this would be the top where it would break, but it never did. So here's the double bottom as it's coming up again. Expected to come up here, then it would kind of sit there for a little bit, and then it would go further. That's the typical way the market moves. Once again, it comes down, goes up, and then comes down for the double bottom. So there's a pyramid, a black V in there, and then it starts to go up again, and then it usually goes up higher. Then it would come up here to here, and it would do the opposite. A double top, come down in a V shape, and go back up again, and then come down. And so, but this one, it did not follow the pattern. See that? It didn't follow the pattern at all. It didn't break above that point. And it actually started going back down, and it started going down further. But on another time frame, like the hour over here to the left, H1, there's an H1 down there. So click on that. On a lower time frame, this would be considered the double bottom. So it came down and then went back up and came down for a double bottom, but it went down past a little bit. And so now it's looking to eventually, the speculation is that it's going to come up and break up here, up to over here where all these candlesticks are clumped together. So that's the anticipation. So that's why this trade is still on theoretically. It just happened to go against me. And so I got a stop loss way down here. So that's why I'm waiting for the 12 o'clock midnight for the London central bankers to start the main trading floors going. That's when the markets really start to move. So when the central bankers get to the desk and start working for the day, and they'll probably move it up. And I'm anticipating that it's going to keep going and keep going and keep going and keep going and keep going, because on the next higher time frame, which is the 4 hour, because this is the 1 hour, up at the top where the blue letters are at, it says GBP, JPY. Just to the right of that, it says H1. That's the 1 hour time frame. So to get a bigger picture, to zoom out with the microscope, so to speak, just tap on it and go down over here to the left to 4H. Tap it again, and that'll give a bigger picture. So, and once again with the bigger picture, here's the big move up, the big move, and then it topped, and then it's coming down right there, and now it's anticipated that it's going to go back up for another double top, and then it's anticipated that it'll come back down, or it could just keep on going. So that's the big speculation in trading. Speculation is, shall it keep on going or shall it come down? But usually usually the pattern plays out. For the most part, the pattern plays out. But if it doesn't, then it's wise to have a stop loss just right up here above it. And don't bet a lot of money, just bet a little bit of money. Just bet a little bit of money and then put a stop loss. About 30 pips is usually the average stop loss. Sometimes, some traders want to feel more safe, so they'll put it at 50 or 60. So that's why to be disciplined and to win, or to have money, to get money in trading the markets, to be disciplined, to just trade a little bit of the money, so that if it goes up 30 pips and it stops out, then only just a little bit of money is lost. So if a guy has $1,000 in the account, then he would calculate the way that the popular calculation is the 30 pip move, if it stops out, is only going to be a 3% loss on the $1,000, which is only $30. 3% of $1,000 is $30. So then the trade would be one lot, or one mini lot is what it's called. One mini lot. So every time it moved up in number, it moved up. Over here on the right, as this thing moves up, the numbers move every time it goes up. So if it gets to there, it's at 188, 286. So 188, 286 plus 30 pips is going to be 50, because the third number over here to the right is just a micro number. It's kind of like a split second hand. The only ones that really count are the two numbers to the right, the decimal point. So if it's at, say, it's at 31 right now, 15. So 31 plus 30, and it would go up to 60 as it's going up here. 60, around there. That would be the good place to put the stop loss. That's 30 pips. But sometimes people feel more safer to have it way up here. And so instead of trading $1 per pip, they would trade 50 cents per pip, so that they could go up to 60 if they wanted. But like I said, like I was sharing earlier, going over to the trade screen here in the history. See over here to the left? This start off at the bottom right here. See, it says sell 75. Whoops. Yeah, here it is. It says sell 75. Okay. That's 75.00, which is $750 a pip. So 750 times a 30 pip stop loss is $750 times 30, which is, go to the calculator, $750 times a 30 pip stop loss is $22,500, which is 3%. What would that be, a $200,000 account? Let's see, 200,000 times 3% equals, that's 6,000. Okay, so that would be more like a $500,000 account times 3% equals, no, that's 15,000. So that would be more like a $750,000 account times 3% equals 22.5. So there it is. That would be a $750,000 account, which is almost $1 million account. And to trade a $75 lot down here at the bottom, the closest one at the bottom, see that? So for me to trade a $750 trade on a $100,000 account, you know, that's considered not very disciplined. However, some traders have been trading the market for so long, and they're so good at getting in and out of trades because they got a lot of experience, and they can really anticipate very, very nicely, very accurately how the market's going to move from experience. You know, they've lost enough and won enough to be able to trade more risky, to trade with more risk. So it all just depends. But that's why it's wonderful to trade with these. These are called demo accounts right here. This is fake money. Right here, this is fake money. So here's let's go back to the time frame to the 1 minute. So here we see it didn't just keep going straight down. It went up. Sometimes to go down. And then going on so this is a 1 minute time frame. So sometimes here's the move up, then it came down, and now it's making another move up to form another double top up here. And then it's expected to keep going and then come down and touch. So yeah. So there it is. We could sit here and watch it and see if it comes up to there and see what it does. And whether or not it's going to stop right there for a little bit and go sideways, or if it's going to blow through and keep going. So there it's rising to the top. I'll get these crosshairs out of the way. So that would be a good place to place a trade right now. It would be the perfect place to place a trade. Is right now. Risk 3% of the count, or seeing how it's on a shorter time frame, one might want to only trade just barely any on the account. Maybe just 50 cents worth of stuff, or it all depends. So see, we can see that sometimes it goes above and then it comes down, and so we're still waiting for this 1 minute candle to close to give its position. And usually it's best to wait for the candle to close. So there it closed, and that would be the anticipation right there. And sometimes just wait for the second candle to close and then place the trade. I'm not able to put any trades on right now because the account is maxed out from that $13,000 loss. There isn't enough money in the account to trade anything. It won't allow it to trade. So, but that's a wonderful thing to know, though. Also, that for $100,000 account, the maximum that shall be allowed to be traded is that 75 lots. It's around the closest. So look at that. So now it's kind of thinking, shall it go? Is it going to go further? And so it could be that it's wanting to form a double top right here on this larger picture. So here it came all the way up, and then it came all the way down. Then on a larger picture, it could be wanting to go all the way up to there and then come down. So go to the next time frame on the 5 minute. It'll give more picture on that. And so yeah, look at that. So there it is on the 5 minute, up, down, and now it's wanting to come up for a 5 minute right there and put a top right there. And then possibly come down and then form another double bottom down here, and then scoot up and then come up to around here. Could be somewhere around there where there's a lot of congestion, the main body area right in here. Or it could want to come all the way up to this double top, and there's one over here too, like a triple top, and that would be a quadruple top. So it would stop right there for a little bit, and then the central bankers would start watching everybody and see where they placed all their trades. There's a bunch of traders that they saw place their trades to go long, and they placed all their trades to sell, expecting it to come down, and there's a bunch of people that placed it to go down, and the central bankers will say, well, all these people are expecting it to go up. Let's just go up and stop them all out, because they all got their stop losses set, and they're going to get some free money. Well, if they expected to go up, it would come down, take out their stop losses. Wherever they wanted to put their stop losses, they might bring it down to here, or down below this low right here. Put the stop losses down there. So the bankers, a lot of times they like to have happen is they'll bring it all the way down and take out, say there's like a couple million traders on the market and they got their stop losses right here. Well, the central bankers are going to stop it all out and get a bunch of free money And then they move it up. That's exactly the game. That is the game right there. You know, and everyone's pretty much got a good idea what the game is. Like you know, and the hardest thing for trading any market is being disciplined and just place the little bets, just 3% of the account. And it's always the ones that don't have the discipline that lose all the money. And I've been there. So I'm getting back into trading now. I haven't traded in 10 years. So but you know, traded for 5 years straight, but haven't traded for 10 years. So, and lost $130,000 trading. So, ran out of money. So, and I wasn't winning. Didn't win because I wasn't disciplined. So hopefully this time around that I should be disciplined. But anyway, I'm gonna stop this video because I'm running out of gigs. So yeah, go back to the camera. So there the brother is again. Nothing like ding the dong. Brother needs some ding dong. Look out. Need to pop the cork. Look out. But like I said, I haven't slept. I didn't sleep at all. So I've been up since yesterday. So I'm up all day today. I'll probably be up all night. But you know, it's easier when I don't have to have someone slaving over me, expecting me, to do this and do that. That's the cool thing with trading. Just a nice slow pace. Don't have to wear myself up, and I can stay up 2-3 days in a row. So it's just one of those things that happens with trading. Especially for, it gets to be that way because, in first trading, all the losing trades, being big, the trade goes against, and it's down thousands of dollars, and it's like, oh my God, it's got to come back. And not having much experience to really know how the markets function and where it's going to move. So that all plays into it. But plus losing all the money and getting desperate. It's like, oh my God, I'm losing all the money. Let me place a bigger bet this time so I can get it back. Otherwise I'm going to just lose. So, all that stuff plays into it. Anyway, that's that. So, later. Get this thing over here. Swipe it. And shut it off on the red dot.